It's been a tough few weeks for gold. We've seen it plunging in the aftermath of the vaccine news. The vaccine news, obviously, being the catalyst for the economic recovery we've all been hoping for all year. And the reaction that we've seen in the market certainly suggests that people are buying into that. Not just one vaccine, of course, but three. The bulk of the reaction came on the back of the Pfizer news a few weeks ago. Since then, we've had Moderna announcing extraordinary results as well, followed finally by AstraZeneca earlier this week, announcing results with only a 70% effective vaccine, but with one particular dose, it could be as high as 90% or even a little bit more. Obviously, the benefits with the AstraZeneca vaccine being that it costs far less than the other two. And of course, it can still be widely distributed more easily because of the storage conditions in which it needs to be stored. So the news has been very good for the markets, it's been very good for sentiment. And what we've effectively seen is gold realign itself with risk aversion. Now, you'll remember for most of this year, gold has been quite well aligned with the stock market. So it's actually been more aligned with positive risk appetite rather than negative risk appetite. But we've certainly seen this relationship appear to re-establish itself once again. Stock markets at record highs. The Dow yesterday hitting 30,000. Meanwhile, gold has been on a torrid run over the course of the last few weeks, culminating this week in a break of 1850. Now, any of you who have followed the videos over recent months will know that 1850 has been that major support over the course of the summer. Every time we've tested that level, we've run into significant support. And it seems that the AstraZeneca news earlier this week was the straw that broke the camel's back as far as gold is concerned, quickly moving back towards the 1800 point. And if you look at the momentum indicators on the chart, it's not looking great as far as gold is concerned. We may see some temporary support along here, but really it looks as though this is going to be a struggle as far as the yellow metal is concerned. Maybe we'll see a bit of profit taking, but ultimately the momentum indicators do not paint a good near-term picture for gold. Now, below here, the next area of key support is 1760, 1750 zone. But I wouldn't be surprised if this maybe pushes even a little bit further down in the near term. I think the key thing to point out here is the relationship also with the US dollar, because the US dollar isn't performing particularly well either. The greenback trading around its own lows over the course of the last few months. So it's not really a dollar-driven move, but it is still very much US-centric. It's a yield-driven move. In the aftermath of the Pfizer announcement, we saw a spike in US Treasury yields. That was really the defining point as far as gold was concerned. And while these yields did settle down, we have been seeing them gradually increasing, particularly at the longer end of the curve. So the steepening of the yield curve in the US is what's really weighing on gold prices at this moment in time. Typically, we could see this potentially be a supportive factor as far as the dollar is concerned, but that's not the case right now. But it's not stopping gold heading in the opposite way to other risk assets. So that's been a really interesting development, I think, over the course of the last few weeks since the vaccine news. The idea that we are now going to see some form of economic recovery, maybe even sooner and faster than we expected, is, I think, weighing on gold. Now, I think it's really worth saying that the longer term prospects for gold, I still think are potentially bullish. We are still going to see some Fed easing. We are still going to see ECB easing, likely in December. We could even see a US fiscal stimulus package if Congress can get its act together as well. And other central banks are going to remain in easing territory as far as at least the next year or two is concerned. So these are bullish factors for gold in the longer term. But at the moment, the vaccine news really is dominating, and that's getting people excited about the prospect of an economic recovery. So it's going to be really interesting to see if it does catch up and if gold can get another lift once the dust settles on all of the vaccine news. But right now, the near-term prospects are not particularly great. And as I say, 1750s, 1760s next support if 1800 falls, and then $1,700 below that. But we're expecting to see much more volatility from gold now. And I think it's going to be a really interesting one to follow into the end of the year.